Silver's got a ways to go, but once it really starts to break, I don't know where the key level is. Is it 35? Is it 40? You know, where it is. But I think when it goes through 50 next time, it's going to go through it, you know, like that proverbial hot knife through butter. And then I think 50 is going to become the support level for silver. But then I think it could quickly double to 100, you know, especially if gold keeps rising. So if gold goes to 3,200, 3,300, you know, I think in that environment, silver could go to 100 and it would still not be expensive relative to gold. It'd still be pretty cheap. Well, I mean, they didn't care about 2000, so I don't know why 3000 would be much different. So I don't know if it's a number that's going to be the catalyst for uh, investors to wake up, not only to the opportunities in gold in the bull market. You know, gold is now up tenfold since the low in 99, 2000, 2001. It's outperforming the S&P. You know, they were talking about the S&P hit a new all-time record high the other day, but compared to where it was January 1st of 2021, the S&P was down about 57% if you price it in gold. So, you know, for all the, you know, the hype in the stock market, it hasn't even beaten, you know, a bar gold, right? And so it shows you that really what we're looking at is inflation, not legitimate increase in value. But I think at some point, investors are going to look at the bull market they've been missing. In fact, all last year, investors were selling their gold, and that's carried into this year. Americans have been net sellers of gold. They've been liquidating gold ETFs. They've been selling their physical gold. I know that just from my own gold company, where, you know, we've been getting a lot of people calling us up to sell their gold. There's been net outflows out of all the gold stock ETFs over the last year and so far this year. So Americans have been completely missing from this bull market. It's mainly been led by emerging market central banks who have been the big buyers. And they're not anywhere near done buying. They're really just getting started. They have a lot of gold to buy. So when the public starts competing with the central banks, then yeah, I think you're going to see an acceleration of the uptrend. And I think then it'll spill over into silver because the central banks haven't been buying silver because they don't really have a place to store it. So they buy gold. But the public will buy silver. So I think silver has even more short-term potential than gold. And I think money's going to come into the mining stocks. I think Wall Street is going to take a look at stocks that are trading. I mean, the big stocks are trading at very low multiples, low double digits, you know, 11, 12 times earnings. And that's, you know, trailing earnings. Their actual earnings for 2025 will probably be so much higher than what analysts estimate that most of these big stocks are probably sporting PEs of like 7 or 8. You know, compare that to, look, you know, Walmart, which is down 6% today, you know, is trading at 40 times earnings. I mean, why pay 40 times earnings for Walmart? I mean, how fast could they grow their earnings? They don't have anywhere near the earnings growth that you're going to see in these gold mining stocks that are trading for, you know, a fraction of the valuation of a Walmart. It's mainly a function of the expectations of future earnings. I think the analysts that cover these stocks and stock market investors in general, they have no idea why gold is going up, and they assume that it's just a fluke and that gold prices are going to come back down. And so they're not willing to put a lot of value on gold companies' earnings because they don't think the earnings are sustainable. Meanwhile, they look at the increasing cost of mining and they assume that that's going to continue. So they think it's going to continue to get more and more expensive to mine gold, but they expect the price of gold to come down. So it really is going to take a change of that perspective. Now, of course, at some point, gold prices will go up so much that it doesn't even matter if they come down. In fact, I think we're already at that point. I mean, I think even if gold went back to $2,000 an ounce, I think these mining stocks are still a good deal. But gold's not going back down to 2,000. It's more likely to go to 4,000 than 2,000. And so analysts have to start, you know, pricing this stuff in and realizing that there's tremendous potential. Now, if they don't realize it, the companies themselves will. These gold companies are increasing their share buybacks. And so if Wall Street won't buy the stocks, the companies will buy the stocks. And they have massive earnings to do it with. And a lot of these stocks have got great balance sheets now. They don't have a lot of debt. They got a lot of cash. They're earning tremendous amounts of cash. There are companies that are able to mine golds for under $1,000 an ounce. Most of them, the cost is maybe $1,200 to $1,400 an ounce. But when you're talking about $3,000 gold, there's a lot of margin in there. Yeah, it's because the public has been missing, and the public is usually the buyers of silver, not the central banks. They say it's the poor man's gold. When gold got up near 2,000 in 2011, when the public was involved, when the Fed was doing QE and everybody was worried, and gold prices got up to 1,900, silver got up to 50. Now gold is 50% higher than it was at that peak, and silver's 40% lower, right? So silver's got a ways to go, but once it really starts to break, I don't know where the key level is. Is it 35? Is it 40? Where it is. But I think when it goes through 50 next time, it's going to go through it, like that proverbial hot knife through butter. And then I think 50 is going to become the support level for silver. I don't know how long it's going to kind of base build at around 50, low 50s. But then I think it could quickly double to 100, especially if gold keeps rising. So if gold goes to 3,200, 3,300, I think in that environment, silver could go to 100, and it would still not be expensive relative to gold. It'd still be pretty cheap. Look, Trump is still selling his watches. I see those commercials all the time. Trump is a promoter. He's a marketer. He's got a lot of business partners, and they made a quick buck off of this. I was embarrassed by it. I wish he hadn't done it. But it does shine a light on the absurdity of crypto, including Bitcoin, because I don't see really fundamentally the difference between a meme coin and Bitcoin. Bitcoin is a meme. The meme is that it's digital gold. It's not, but people think it is. But at the end of the day, there's a lot more that Bitcoin has in common with Trump coin or Melania coin than they have differences. And I really think it's unfortunate that Trump has aligned himself with so many people in the crypto industry. Yes, he got a lot of money from them. He got a lot of votes. Maybe that was the difference in winning the election. You never know if they tip the scale. But they certainly helped. But he needs to just distance himself from that now. We certainly don't want to establish some kind of reserve of Bitcoin and use government money to buy Bitcoin. That would waste all the money we've saved from Doge. In fact, I'd rather have people send Social Security checks to dead people than buy Bitcoin. Bitcoin would be a bigger waste. So hopefully that doesn't happen. But yeah, and it wasn't just the insiders. Look, there's a kid in my neighborhood, 21-year-old kid. I don't know him, but somebody sold him a house over the weekend for $2.1 million, a little house. And he said, yeah, this kid made $10 million. He's 21, so he just bought his first house. He made $10 million on Trump coin and Melania coin. But he wasn't an insider, but apparently he was watching very closely, and he bought Trump coin at 27 cents. And he sold most of it, just at a couple of bucks. He didn't have it when it was $75, but he got in and out and made himself, between those two coins. And he also was in on Libra. He made money there. He's ready. He's got some kind of program. The minute they launch, he just goes right in and buys and then immediately sells, right? He doesn't stay in very long, right? He just gets in and out. But he's a 21-year-old kid. Now, he made $10 million. Where'd that money come from? Did he add any value to society that he was able to get $10 million? No, he didn't add anything. That money came from the 10 million that somebody else lost. Right? That all these coins are a zero-sum game or a negative-sum game because there's a lot of costs associated with organizing them and promoting them and making them work. But when somebody makes money in crypto, it's because somebody else lost it. And the same is true with Bitcoin, except that the people don't know they've lost it yet. Like a lot of people have made money in Bitcoin. They bought Bitcoin and they sold the Bitcoin at a higher price, and then they bought stuff with it. Now, the reason that they were able to sell Bitcoin and buy something with it was because somebody else bought Bitcoin. Now, the person who bought that Bitcoin, since the price of Bitcoin is way up still, he doesn't realize he's lost any money yet because it's still in this pyramid scheme. But eventually, the people who still own Bitcoin are going to want to sell theirs because they're going to want to buy something. They're going to want to buy a house. They're going to want to buy a car or a boat or take a vacation or whatever it is they're going to want. And then when enough people decide they want to get their money out, they're going to realize it's not there because then the whole thing collapses. And then the people realize how much money they lost. Now, of course, if you sell now, you haven't lost your money because you get out. It's like a game of musical chairs. But when the music stops, if you're still holding Bitcoin, you lose. Right? But that's why they tell everybody, never sell your Bitcoin. Right? Who made that up? The people who want to sell their Bitcoin. They made that up so other people won't sell theirs, so they can still have a market to get out.